You got all this stuff as an equity fund manager. It's been a pretty good start to the year with the Dow up about 6% or so here. What is your take on the macro market right now before we get a little more micro?
Sure. Well, we're dealing with a few things right now. The underlying economy is okay, and you can see earnings are coming through.
Okay or good?
It depends on where you are. The more global you are at this point, the less good it is. And so what we're hearing from companies like Caterpillar yesterday is, as we get to the emerging markets, China, Europe, there are some slowing that we're seeing across the globe. Obviously in the U.S. too, some slowing, but still more growth than not. So it depends how global you are and how domestic you are. More domestic, the better, and more global, a little less.
Okay, sounds like you're buying then domestic-based, smaller mid-cap companies.
Not necessarily, because as we're finding, the value happens to be in places where there is some concern. And so since we're value managers, we're going to places where there is the most value in the market, which is more cyclical, economically sensitive things at this point.
Give us an example.
Well, a good example might be a company like Sallie Mae, for example, which is a financial. So when I go back to cyclicals, I go back to either financials, industrials, consumer discretionary type names. So you have a company like Sallie Mae trading at 10 times earnings. There's concerns about credit. There's concerns about slowing. But we think, again, since it's a domestic focused business with lots of positive things happening, the value is there.
Were you a buyer of Caterpillar yesterday on the 9% sell-off?
We actually don't own Caterpillar, but we are overweight industrials, and we think there is some significant value there. Again, you just have to parse through sort of where they're getting, where the concerns are versus what's priced into the market.
How about this? Were you a buyer of stocks in December as they were selling off?
Absolutely, yes. So in December, there was a unique sort of culmination of a bunch of negative
It was literally
effects.
like a polar vortex of bad news and market reaction, probably spun up by ETF and index funds, exacerbating the selling.
Yes, so good way to put that right now. But if you think about the fourth quarter, we had all kinds of things happening. So there were concerns about the Fed. There was obviously trade and tariff concerns, and all these things were weighing on, is there a potential slowing coming? And the answer is yes. Things are slower this year than they were last year. But as we move toward or through the fourth quarter, we got some relief here around the Fed, saying that they're pulling back a little. They're thinking about slowing down. They're talking about removing some of the balance sheet issues.
Is that the kind of language you want from the Fed?
I think the answer is yes. I mean, the Fed is now more data dependent. That's good, as opposed to just being on a blind path of raising rates. But they were also, reacting to a very strong economy and improving inflation rates. That was important, and so they're doing their job. So I guess my point is, it's good to know they're getting toward the end of what they thought was, dampening down some of these negative effects. And now they're going to take a pause and think about what's happening, which is good for the market. And so the market reacted to that positively. And now you're talking today about tariffs, et cetera, and that's the next big issue, obviously. And it's
How closely, as an equity fund manager, do you watch that topic?
It's
the trade talks.
We watch it every day. So it's probably the most critical issue, because if you hear companies like Caterpillar or Stanley Works or other companies coming out now reporting earnings, they're talking about tariffs specifically having an impact, not just on trade, not just on economics, but on actual costs. And so in some cases, earnings are coming down because of tariffs that are out there, or the concern around the new level of tariffs that may kick in here toward the end of March if we don't get a resolution. So it's very critical to earnings for certain companies.